Hey Bitcoiners, welcome to Edge 21, your ultimate hub for everything Bitcoin, cutting through the noise to bring you the most important moves in the market. I'm Lachie, and today we're breaking down Bitcoin's latest surge, a powerful jump back over $105,000. What's driving this momentum? What do the numbers and charts tell us about where Bitcoin is headed next? Stay tuned as we unpack the key insights, institutional flows, and technical signals shaping this breakout, so you can stay ahead of the curve. Let's dive right into the story behind Bitcoin's latest rally. The single biggest factor behind this breakout is relentless institutional demand. Over the past week, spot Bitcoin ETFs saw a staggering $2.4 billion in net inflows, with BlackRock's iShares Bitcoin Trust alone pulling in $430 million per day and reaching more than $71 billion in net assets. This isn't just a blip. Institutions are now allocating at least 10% of their portfolios to Bitcoin, marking a historic shift from speculation to mainstream adoption. When these funds buy, the underlying Bitcoin is pulled off exchanges and locked into cold storage, tightening supply and amplifying price moves. Bitcoin's fixed supply of 21 million coins is at the heart of its value proposition, and right now that scarcity is on full display. With institutional buyers accumulating aggressively, liquid supply on exchanges is shrinking fast. Recent data shows that exchange reserves have dropped sharply, and long-term holders now control nearly 70% of all Bitcoin in existence. This supply squeeze is a key reason why even modest demand can trigger outsized price jumps, like the one we've seen this week. Volatility is back in a big way. On June 20th, as Bitcoin dipped below 103k, the market saw over $464 million in liquidations, most of it from over-leveraged long positions. This forced selling triggered a cascade effect, briefly pushing prices lower before a swift rebound. But here's the twist. Despite these liquidation spikes, open interest in Bitcoin futures remains stable, signaling that the market structure is healthy and that traders are quickly stepping back in. It's a classic case of the market shaking out weak hands before powering higher. Technically, Bitcoin's bounce from the $101,000 to $102,000 support zone is significant. This area aligns with both the short-term holder cost basis and the 200-day moving average, making it a dense cluster of buying interest. As long as Bitcoin holds above 100k, the uptrend remains intact. The next major resistance is at $109,800 to $112,000. If bulls can break through, analysts predict a move toward $113,500 or even higher by early July. On the flip side, a drop below 99k could see a retest of the 94 to 96k zone, but for now, momentum is clearly on the side of the bulls. This rally isn't happening in a vacuum. Bitcoin's breakout coincides with a surge in the S&P 500, which gained 1.3% on the same day as institutional investors rotated into risk assets after dovish signals from the Federal Reserve. Geopolitical tensions and macroeconomic uncertainty initially triggered the sell-off, but as markets stabilized, Bitcoin's resilience stood out. The growing correlation between crypto and traditional markets underscores Bitcoin's maturation as a global asset class and its increasing role in diversified portfolios. So what's the bottom line? Bitcoin's latest surge is powered by a perfect storm of institutional buying, supply scarcity, and bullish technicals, all set against a backdrop of global market shifts. At Edge 21, we'll keep you ahead of every major move with personalized insights, AI-powered feeds, and real-time alerts. Don't forget to subscribe and hit the bell for more in-depth analysis on everything Bitcoin. I'm Lachie, and this is Edge 21, where Bitcoiners stay informed, empowered, and ready for what's next. Thanks for watching, stay strong, and hodl on.